Welcome to Quantified Strategies. Today we show you 3 ETF trading strategies complete with specific trading rules and settings so that we can find out how they've performed. Let's jump straight to our first strategy of this video, the Turnaround Tuesday strategy. This strategy has worked in the stock market for many decades and has been low-hanging fruit for many years. We wrote about this strategy on our website as long back as 2012. By the way, we're always working hard to create new and exciting content, so your likes and subscriptions really help us out. Thanks. So what's this ETF strategy all about? We buy S&P 500 at the close on a Monday if the close is lower than on Friday or the last trading day if Friday was a non-trading day. That's it. It can hardly get any simpler than that. We sell on a day when the close ends higher than yesterday's high or after 5 trading days. A trade example is shown on the screen. The green arrow shows a Monday where SPY, the ETF that tracks S&P 500, opens up but falls throughout the day and ends lower than Friday. We buy and sell 2 days later when SPY rallies and closes above the yesterday's high. The equity curve shows that $100,000 invested in SPY in 1993 is worth almost $2.2 million today if we only trade this ETF strategy. Not too bad for being such a simple strategy and being invested only 24% of the time. The strategy is beaten buy and hold with significantly lower drawdowns of only 23%. Even better, the strategy can be improved to increase the average gain per trade, something we did on our website and for our paying subscribers. Let's go to the second ETF trading strategy. This one's also one of the hundreds of ETF trading strategies we've published on our website since we started writing in 2012. The strategy is called Lower Lows and Lower Highs and was published years ago. It's a mean reversion strategy and works for many stock ETFs. The trading rules and settings are pretty straightforward, and we buy when both the low and high of the day is lower for the third day in a row. We buy on weakness and sell on strength. A trade example in QQQ is shown on the screen where we buy on the third day of weakness and we sell 2 days later on an up day when the close is higher than yesterday's high. The equity curve is not as good as the Turnaround Tuesday strategy, but still the 100,000 compounds at almost 8% annually and ends up above 600,000. The average gain per trade is almost 1%, but the strategy suffers a drawdown of 31% during the bear market of 2000 to 2003, but since then it's performed really well. This ETF trading strategy works nicely on other stock ETFs as well, even bonds. Let's go to the third of our ETF trading strategies. This one's slightly more complicated and involves 3 ETFs. The strategy was developed by the famous podcaster and money manager Meb Faber and published around 2015. It's a momentum rotation strategy for stocks, bonds, and gold that uses monthly bars. We use the following ETFs: SPY for S&P 500, GLD for gold, and TLT for bonds. At the end of the month, we invest or stay long when the 3-month simple moving average is above the 10-month moving average. We allocate 1/3 of our capital to each ETF. For example, if we get a signal in 2 ETFs, we invest 66% of our equity and stay 33% in cash. Let's backtest the strategy. The strategy worked really well until 2015 when the strategy was published, but since then it's not performed so well. The annual return is almost 8% and max drawdown is modest at only 18%. Is the poor performance after 2015 just a temporary setback? That's hard to tell, but periods of weak performance is to be expected. The backtest that Meb Faber did goes back to 1971, and it's likely that any period of less than 10 years will be erratic. This is a long-term momentum and trend-following strategy, and patience is required. We've now shown you 3 ETF trading strategies. But please be advised that nothing in this video is investment advice. Always do your own research and make sure you put your strategies in a demo account for 12 months before you commit real money. We've been running our website since 2012 and we receive many questions from readers. Below, we've compiled some of the most typical and frequently asked questions about ETF trading. What is the best ETF strategy? Are there best ETF trading strategies? There is no best ETF trading strategy. Instead, you want to have many trading strategies that trade different ETFs, different time frames, and different market directions, both long and short. The power is in diversification and strategies that complement each other. Can you swing trade ETFs? Of course you can. The strategies in this video show examples of how it can be done. What are the advantages of ETF trading strategies? The main advantage is that you invest in a basket of stocks and thus you reduce the chances of gut-wrenching adverse movements. A single stock can fall 100% and rise unlimited, forcing you to go belly up if you're short. Moreover, ETFs can also be a great substitute if you're trading single stocks. ETFs can be used for hedging or diversification, for example. What are the disadvantages of ETF trading strategies? The disadvantage is that you're unlikely to have huge winners. A stock can rise 500%, but this is unlikely for an ETF unless you own it for decades. However, for most retail traders, the wisest thing to do is to buy different asset classes and let time do the compounding. Are ETF trading strategies good for beginners? We believe so. However, you should always start trading in a demo account and wait at least 12 months before you go live with a back-tested ETF strategy. We believe it's better to trade ETFs before you start trading individual stocks. Are ETF trading strategies best for long or short-term trading? We think you should trade both long and short-term. The next video coming up, called 3 Profitable Trading Strategies, show you how you can combine long and short-term ETF trading and investing. You want to diversify into several strategies that complement each other. What are the best ETF trading strategies? There are no single best ETF trading strategies. You want a portfolio. Can you day trade ETF trading strategies? Sure, but day trading is harder than swing trading. Day trading's noisy, meaning it's hard to find tradable patterns that last for a long time. We believe the best opportunities for retail traders are in using longer time frames. For example, daily, weekly, or monthly bars. We appreciate you taking the time to watch our video. If you found it helpful, please give it a like and subscribe to the channel for more content like this. If you have any questions or feedback, please leave a comment below. We love hearing from you. That was all for today, and we hope you like it. And stay tuned for the next video coming up showing 3 profitable trading strategies.